Good morning, everybody. Hope you had a good weekend and that you're ready to start this upcoming week. And as usual, this is the time that it's excellent time to talk about questions, concerns. Hey, we're all getting ready to I mean, I talked to every single person, I think, except for 2 people on the system here in the last month, and everybody except for 1 person has committed to doing 3 events next or in September and October. So I know that a lot of you are getting ready to do that, and if you've got questions or concerns about that, now would be a great time to bring that up. Obviously, with everybody doing these events, if you've got a question, somebody else is going to have a question, the same exact question. So now would be a great time to bring those things up. If you've had problems, if you've had successes, please bring those up right now, and we will cover those. This morning's call, we're going to kind of split up. We're going to have Andrew Bakken from Advisors Resources talk to us about some opportunities we have product-wise, and Jason will be on as well to help out. So, but after he is done talking, then we'll, if you've got questions, we'll address those questions at that point. But both of Andrew and Jason have other commitments, so we want to make sure we get them going up front here and get this important information out there. So I appreciate everybody. If you've got questions, type those in. We'll get to them right after Andrew and Jason get done here in about a half hour or so. So, Jason, you want to introduce Andrew?
Absolutely. First and foremost, I want to say good morning to everybody. Hope everybody has a good summer. My wife went back to work today, which is kind of the sign and the signal that summer's over. So it's kind of a bittersweet with some of the business that we've got upcoming in the fall. Due to a lot of recent events, we've had a lot of reps calling in, talking life insurance, asking questions. Admittedly, I'm not a life expert, more on the annuity side. But I wanted to make sure that everyone was aware that they have Andy Bakken available to them. Andy's been instrumental in growing our firm's life insurance, as well as my personal, helping me on that. Andy's going to talk a little bit more about his background. He does have an impressive one, working at other FMOs, working the life in the LTC. But because of the high demand, more or less, we wanted to get him on here to ultimately let you know that you have him available to you for case design, case follow-up, and he is an expert. So without further ado, get Andy Bakken on here, and he's going to go through a presentation.
Thank you so much, Jason, for the kind words. Welcome, everybody. I'm glad to be a part of this phone call. It's been fun working with Jason's guys over the last couple months. I'm actually about 3 months in now to Advisors Resource, but with that being said, let me pull up my PowerPoint presentation real quick here, and we'll kind of dive into it. One of the things Jason specifically asked me to cover today was MoneyGuard, and so I am going to go into that in more detail, but I wanted to first just kind of talk to everybody about what we have available at Advisors Resource. And everybody has worked with Jason for quite some time on the annuities piece. But my role when I was brought into Advisors Resource was to help grow these other 3 main lines of business in our world. So I have a very extensive background in life insurance specifically. And actually, I'm going to switch one slide here. I spent 6 years working at Crump Life Insurance, and my role at Crump was to work with one specific national account. And basically what I did was helped everybody as far as life insurance goes, but then we also had different departments which were kind of slow at times. So I took it upon myself to do all of my own long-term care and all of my disability as well. And so basically we were responsible for growing this business for one specific national account, and we did quite well. You know, for each of the years, I think I was a sales manager for 4 years when I was at Crump. For each of those 4 years, we were in the top 5 of all of the national account teams. And we did about $5 million annually just from those 3 lines of business. We actually did very, very little on the annuity side, and all of our business came from this specific, or these 3 specific lines of business. So I do have, you know, a background working in this industry. I was a producer, so I know, you know, the pains, the bumps in the road, things like that that you all go through as well. So I have been there. I have felt the pain. but hopefully there's bright times ahead, and we can work well together and each make some money. So with that being said, I'm going to kind of dive into long-term care planning, and specifically with MoneyGuard. When I was doing my research for this call, this was the most interesting statistic I found, was that 70% of people age 65 and older at some point are going to require some type of long-term care. Now that's a pretty significant number. And so to really understand the significance of that, I think we kind of have to dive into the pricing a little bit. You'll see here that an assisted living facility on average is going to be about $3,300 a month. Just for a nursing home, for a semi-private room, we're looking at $200 a day, or $6,000 a month. We're talking $70,000 a year for somebody to spend in a nursing home. There's a lot of people out there that think that they will probably never use it. I can give you a personal story. My grandfather actually just canceled less than a year ago his long-term care policy. Most of the people can probably figure out where he is sitting today. He's sitting in a nursing home. We actually just put up the family farm for sale so that we had enough money to actually pay for his long-term care over the next few years. So I've felt this personally myself, and so let me dig into, and you'll see it right here, the common reasons why most people aren't going to purchase that traditional long-term care policy. And first and foremost, it's very expensive, which is the exact same reason that my grandfather canceled his policy. It was very expensive. It can be a hassle sometimes to go through the underwriting, the application, the process that goes with a traditional long-term care policy. We've seen rates increase from, I think, just about every single company out there at some point. They've gone to the past policies, raised those prices. They've increased the pricing on all of their new policies as well. Most people think that they will never need it. Why pay for something that you're never going to use? And then this next one is my segue into MoneyGuard. Most people will say, okay, I see the need for it, but if I never use it, I've just wasted that annual premium for the last 20 years, and that's very, very expensive, very significant. I could have passed that money on to my heirs. So the easiest way to explain the proper profile for somebody with MoneyGuard is just this easy saying that one of my MoneyGuard reps gave me, and it's healthy, wealthy, and wise. Now, it's very simple to identify who is the right person for MoneyGuard using these three simple words. And I'm going to dive into these in more detail. First of all, we've got healthy, and we've got a pre-qualifying tool. MoneyGuard is a simplified issue. Many policies can be issued within 5 days or so. There is this pre-qualifying tool, though, that says if you answer yes to any of the questions on here, you might as well just stop and move on to the next client. So here's some of the things listed that are on the pre-qualifying tool, and I'll actually show this to you at the end. Alzheimer's is on there, which would make sense, but even anybody taking a medication for memory loss is also going to be instantly disqualified. Some of the big ones that you'll see common: COPD, Parkinson's, type 1 diabetes. Anybody that's had cancer, or a stroke in the past 12 months is going to be disqualified. However, if they're 2 years out, 5 years out, then we've got a very good chance of getting them coverage. And then here's some of the ones I've seen in the past. Somebody that was, on oxygen but still functioning on their own is going to be disqualified. The one I experienced with a policy not too long ago was the handicap permit. We had a lady who actually had carpal tunnel, and so she had this handicap permit. She was about 60 years old, but she didn't want to get rid of it. And so she took the advantages of parking close to buildings, things like that. However, at the same time, she was instantly disqualified for the MoneyGuard policy that we were applying for. With that being said, let me jump into wealthy. Wealthy is kind of the big part of this. Most people have to, first and foremost, they have to be able to qualify for MoneyGuard, but they have to be able to afford MoneyGuard as well. So typically, clients are going to have $750,000 of assets. That can include the home. As I mentioned, we sold an entire farm, to pay for it. So with that farm included in there, my grandpa was well worth $750,000. Most cases are single premium, so anywhere from $50,000 to $100,000. I believe the average is about $70,000 that is put into a MoneyGuard policy. So these people have to have enough money, up front to do a single premium. However, there are other options available. There is a 3-year pay, there is a 5-pay, a 7-pay, and a 10-pay. Those typically aren't used because the benefits are not as good. And then I get to the whys. And the whys is the fun one. It has to be somebody who sees the need for long-term care. And they're that person that says, I don't want to use it and lose it. They maybe have had past experience like I have. They don't want to be a burden on their family if they go into long-term care, and they want to pass some money on to their heirs, their next generation. And so let me kind of show you real quick a couple of sample illustrations that I ran. And this will kind of help explain it. And there's another thing that you can use when talking about MoneyGuard with clients, and I'm going to give you 3 numbers. And those 3 numbers are 1, 1.5, and 4. And so to explain 1, 1.5, and 4, we have 1 times the premium is always a money-back guarantee. So in this case, I have a 65-year-old male. He puts in $100,000. If at any point he does not like MoneyGuard and wants out, he walks away with $100,000. Okay, the 1.5, and I don't know if you can see my mouse here or not. Highlight this. This is a little bit less because we're working with a male here versus female, but 1.5 is typically the number you're going to get for your death benefit times your single premium. So we have about $150,000, a little less in this case, of death benefit that's going to pass on to his heirs. And then we've got 4.0. 4.0 is the amount times your single premium that you're going to build for a long-term care pool, and that's this number here. We've got roughly, $400,000 that he has now built for that long-term care pool, and he also gets these. He can use this long-term care pool at a rate of $5,500 a month for 6 years.
And real quick, Andy, that $132,000 is tax-free, correct? If they don't
the
use
132, yes, that is correct. So if he never uses his 100, any long-term care, the 132 passes on to his heirs tax-free. That is correct. This long-term care benefit is also going to come out tax-free. And there's an amount, a HIPAA per diem amount that's around $9,000 right now. Once you start going over $9,000 in these types of policies, then you will have taxable issues, but you'll see it's only $5,500. We've got plenty of leeway to go. Let me just flip over to go ahead.
Hey, can you talk about not just Lincoln MoneyGuard too when you're done? If you maybe tap on some of the other companies that we use for this type of sale as well, it'd be great.
Sure, definitely. So here's just a quick example of the female 65, 100,000 money back guarantee, 150 right on, for the 1.5, and then she builds a pool of 450,000. I said I'd show you the pre-qualifying tool real quick here. Here's the full list. Anybody that has any of the conditions on this list is instantly disqualified, and you move to the next client.
Hey, Andy.
You'll see, yes, go ahead.
I got a question that just came in. Does a better risk class change this very much?
With MoneyGuard, there is only one risk class, that is standard. There is tobacco rates, there is non-tobacco rates, but it's standard only for MoneyGuard because it's simplified issue. They don't allow for preferreds or table ratings or anything like that. It's pass or fail with MoneyGuard.
Thank you.
Does that answer that question? Okay.
Yep, thanks.
Let's see here. So this is the disqualifying tool. Is probably, it's the simplest thing that you can put in front of the client. If they check any of them, you can say you start talking about something different. Jason, you asked me to mention some of the other products that we work with. Pac Life in particular has a MoneyGuard alternative. It's basically designed almost identical to MoneyGuard. The thing I've seen with Pac Life is if you have somebody that wants inflation, that's kind of where their strong point is. MoneyGuard will always look best on a single premium with no inflation. Pac Life will tend to look better when you're looking at 3% simple or 5% compound. One of the other things that we do quite a bit of work with is policies, actual life insurance policies that have that long-term care rider. The rider is typically 2% of your death benefit that you purchase, which can be accelerated for the use of long-term care. So that could be nursing home, home health care, what have you. It typically has to be qualified, though. It can't be a family member. So Minnesota Life, John Hancock, Nationwide, Transamerica, and Protective are the companies, Allianz as well, I'm sorry. Allianz has one, and all these companies have a rider that you can add to your life insurance policy. Now, the question before is, does a better health rating, affect the numbers? In this case, yes, because if we have somebody that can qualify for a preferred rate or preferred best, we're going to buy more death benefit, which can then be accelerated with that use of the long-term care rider.
A good question just came in, too, about Pac Life. Since Pac Life has inflation, I assume their benefit numbers are lower to begin with, but higher in 20 years.
That is correct. That's exactly right. And I didn't run any examples of Pac Life, but that's exactly right. It'll start off, and let me go back to this example. I'll just use rough numbers. It would probably start around, on this 65-year-old female, more like $4,000 of long-term care monthly benefit, which will then, of course, grow at 3% simple, 3 compound, or 5 compound over, however many years. And at some point, there will be a crossover. I think that crossover is typically around 15 years, 12 to 15. Any other questions?
Well, I just have a quick comment, too, if I might just take a second, guys. I think the reason I asked Andy to open up or start with MoneyGuard sales, this seems to be the easiest, if you will, transition from a pure annuity guy, and I know a lot of, do a lot of life insurance and LTC on the side, but for those that maybe don't, MoneyGuard is a seamless transition from an annuity sale into an LTC life insurance type of sale, especially if you're doing the sales software and you're getting a lot of the assets. This can be a great home, if you will, for assets not going into an annuity. So I think that this is a really, really easy transition. I do a ton of MoneyGuard, a ton of it. It's with the simplified issue, it really alleviates a lot of the concerns that guys have with underwriting. It takes too long and too cumbersome, so on and so forth. This is a really, really easy transition for those doing annuities.
So Andy,
Jason,
with the simplified issue then, does that mean that there is no home physical, there's no blood draw, there's no anything else? It's just simply a questionnaire qualification and then background by the insurance company?
Very close. I was actually just going to dive into that a little bit more.
Okay.
With MoneyGuard, it is about a 45-minute interview that somebody's going to do. I actually have a form. It's a 4-page form that you can hand to the client and say, here, fill this out. Once it's filled out, you're going to be ready for your interview. The interview is something that needs to be taken very seriously, and they do ask some questions that I think people get offended by, to be honest with you. One of those questions is the memory test. And they ask you 3 words or They tell you 3 words. They'll come back 5 minutes and tell you what were those 3 words that I told you earlier. And people don't take it seriously, which gets them disqualified. But with simplified issue, there's no blood, there's no urine, no blood pressure, cough, any of that stuff. It's basically just a 45-minute questionnaire. Or, I'm sorry, the questionnaire turns into a 45-minute interview that they would do on the phone with Lincoln. They have their own people that are doing these phone calls. Most of them are nurses that do the phone calls for them. So it is somebody that they can trust and go over their medical history with. But other than that, that's it for MoneyGuard. Pac Life is the same way. I believe it's simplified issued. So it's another, just telephone interview is really all that you have to do. But that's why they only have the one rate, and it's pass-fail. When we start talking about life insurance with a long-term care rider, like John Hancock has their UL policy, we can add the rider to it. Now we're talking full underwriting is involved. So you're going to have the paramed come out. They're going to do the blood, the urine, the blood pressure, the height, the weight, an interview. But with all those things being done, now we can start getting into those preferred rates, or possibly, table rated as well. But it might be an opportunity that's a pass-fail on MoneyGuard. We could possibly do nationwide and use, their LTC rider, which actually will allow for 4 tables. So we can do, a table 2 policy and still get them some LTC coverage, where Lincoln is going to be pass-fail. So is Pac Life.
And Andy, is this approved in all states? Is MoneyGuard approved in all states?
MoneyGuard is approved in all states. The only thing I will say is that there may be a few states out there that are still using the old product. It's still listed on my software, so it makes me believe that there's probably 2 or 3 states that haven't approved this MoneyGuard Reserve Plus. The other product is called MoneyGuard Reserve. In those few states, it will actually probably look a little bit more favorable than this, but I would guess that all states will be approved with MoneyGuard Reserve Plus within the next year.
And a couple more questions. Is it not any different than the senior supplement required over age 70 with Lincoln National Life?
I think it's a little bit more detailed than the senior supplement, but it's almost identical. I think they just go into a few more of the medical items, things like that. As far as the cognitive testing, that is identical to what really a lot of these companies on life insurance or long-term care are using over age 65, age 70. The cognitive part of it is definitely the same, but there's more of the medical part involved with the telephone interview.
And what would you say is the sweet spot for age range with this product?
Sweet spot, 50 to 70 would be probably your ideal case. Once you start getting over 70, you'll see here on this example, I ran a 6-year. I think the 6-year looks the best on all of their illustrations. Once we get over 70, now we can only purchase, a 4-year policy or a 5-year policy, and so our total long-term care pool will start to drop significantly. Of course, by $70,000 a year. So that is, I think that your typical age range is going to be 50 to 70, but we certainly can get policies older. It just is a matter of what they feel is appropriate, as far as long-term care pool and what they want to pass on to their heirs.
It's all the questions that have come in so far. So,
okay. If anybody wants to go over cases, and we can work them over, over the phone, or you can send me an email. I'll give you my contact info real quick. It's just andrew.bakken, and that's B as in boy, A-K-K-E-N, at advisorsres.com, or you can give me a call directly, 763-390-8094. If you're already on the phone with Jason and you want him to transfer over to me if you have a case you're thinking about, that's fine as well. So I'm here all the time. I'm ready and willing and excited to work with all 5Q.
Well, Andy, could you also just address some things that, again, some of our guys are very, very good life producers. Most are not, just not familiar with it as much as they maybe would like to be. What are some things they could look for in a client besides, this opportunity with, tying life insurance and long-term care together? What other kind of things can they look for?
Sure. Let me flip back up here to...
Like replacement of current policies and those kind of things.
Yeah, and that's, one of the things I really did a lot of when I was at Crump was policy reviews. And I think policy reviews are probably one of the easiest sales that you can make. And it's one of the simplest questions you can ask somebody. Do you have life insurance? Yes, I do. When's the last time somebody reviewed it? You'll find most people have not had their policy looked at in 5 years, 10 years, maybe never. There's been a large change in our interest rates since somebody purchased a policy back in 1988 compared to now. And most of those policies are quickly crashing, and they're going to fall apart at some point. And those people then are going to be without life insurance. So a policy review is a very easy way that you can make some good money and help your clients out. A permanent policy sale is typically more than a term sale. So I would suggest people start just as simply as asking that question, when's the last time somebody reviewed your life insurance? You might find a lot of them will answer, I don't have any. Well, why not? And then you can dig into it, a little bit more in detail. We certainly offer term insurance. There's plenty of opportunities for key man policies, for buy-sell policies when you're working with business owners.
Andy, if I could jump in real quick, just on a last quick note on policy reviews. If anyone is, as Mike was saying, not necessarily real familiar with life insurance and its intricacies, there are kits out there called a policy review kit. If you're interested, we could send you a dozen or so, and you could pull that out of the drawer if that conversation comes up. Just let me know. It's kind of a and if you got any additional details, but basically from what I've seen from the policy review kits, it walks you through exactly how to do a policy review kit. So those are tools that we can get sent out to you if you're interested.
Yep, that's exactly right. I've got kits from probably about 6 different companies that have put together, specifically for policy reviews. One of the other things that I think is probably a good discussion is, folks that have annuities there, or CDs, money market accounts, municipal bonds, things like that are earning a very low interest rate. Somebody who may never need the funds from the annuity, this is a very good MoneyGuard sale, but at the same time you might have somebody that just says, absolutely not, I will never go to a long-term care home. I have no need for a MoneyGuard policy, but there's still the opportunity for what I've always called asset max or annuity max, CD max, and basically it's showing somebody, here's the taxes that you're going to pay with annuities. Let's leverage that annuity, purchase, a life insurance policy, and now you've turned, a $100,000 annuity that you may never need into $500 to pass on to your heirs. And that's going to be a 65-plus type of sale. You're not going to do it very often for somebody much younger. So that's another very good opportunity, especially if you're sitting down with people and uncovering, their assets and what they may have available. One of the other things that, I'm not sure the exact age range that everybody's working with, but we do have access to disability insurance. I think it's a very undersold but very important policy for somebody to have, especially in their earning years. So we do have that available for blue collar, for white collar. There's business opportunities within disability. There's business opportunities within long-term care and life insurance as well. So those are kind of some of the things I would focus on, is maybe policy reviews as well as asset max, and of course we're here for any questions and any type of sale as well. So.
And if you would take just a couple more minutes, too, to talk a little bit about the life insurance underwriting process in terms of what we can do for you here with, sending out the HIPAA form, getting the records, controlling the records, kind of handling that on advisor's resource end as opposed to letting the carriers handle that. I know that that's a big push that we do really well. Can you talk a little bit about that, too, for life insurance sales?
Yep, definitely. So here's, I guess I'll start with part of the reason why people hate doing life insurance is because of the underwriting process. You have to order the paramed exam, you have to order the medical records. Your client comes back and you find out that they had a heart attack and they didn't tell you about it, and now we've got a rated policy or a decline, and I'm not going to bother shopping it out because they had a heart attack. They may never get coverage. And that's what I've heard from a lot of advisors in the past. And so, as Jason just mentioned, we'll kind of take that dirty work out of there for you. The process on the life side will start with me. I will help you run all the illustrations, and as long as you tell me, up front, hey, he had a heart attack, I'll dig in and find the best company for that situation. But also with that being said, we're going to order that paramed exam for you so that you don't have to do that. We'll send the paramed directly out to the client's house, so you don't have to worry about it. We will order the medical records as well. A lot of times the carriers, the actual insurance companies are going to order the medical records just because there's a reimbursement process of us ordering versus them. Sometimes they don't want all the, every doctor, sometimes they do. So a lot of times we're going to have, just if it's a pretty clean case, the insurance companies are going to order all of those records. But we do have a process called an informal application. The informal application is simply, we know somebody has had medical issues. We don't want to put them through the blood and the urine and the process of underwriting if we know that they're just going to be a decline anyways. So our informal process will allow us at Advisor's Resource to go out to purchase their medical records. We put them into a summary, and then we send that summary out to a number of different insurance companies. The insurance companies then come back and say, sure, we'll take that case, it's standard. The next one might say it's a decline. The next one will be a Table 4. And then what we'll do is once all of those offers come back to me, I actually sit down, run all of the companies again to see, okay, here's where we need to send this case. Today's, one company's Table 2 might actually be cheaper than another company's standard. So we'll go in, we'll run all of those numbers for you, and then send you the illustrations so that you can go and present to your client. But this way they're not actually having to do the blood and the urine and the frustrating part of a life insurance app if they could be a possible decline. So that's our informal process. What else, Jason? That's pretty much it. I've also got a form that I'm more than happy to send folks as far as, what do we do ahead of a paramed exam? So you've sold a case to somebody, and I've seen it in the past. You drink a big cup of coffee 15 minutes before your medical exam, your blood pressure's up. And now you've got blood pressure issues, and now you're rated standard versus the preferred that you should be. I had a case one time where somebody went to McDonald's right before their paramed exam, and their cholesterol was high. So I've actually got a one-pager that says, here's the steps that you need to take before you send your clients out for the paramed exam, and that's just something you can slip in behind the application. After it's done, here, take this. This is going to help you prepare. Make sure you follow those rules so that we can get you the best possible offer.
That's a great point, Andy. I think, too, it's important for me. I'm an annuity guy, proud of it. I've tried to branch out, and I've learned a lot from Andy and Tim and Dave, two of the principals here that handle our life business. And what I saw once is overwhelming with how many companies. Is it term? Is it UL? Is it FIUL? What type of life product do you want to use? Blah, blah, blah. But when it comes down to term and some of our other guaranteed ULs, Andy and our team have a really neat illustration software. So if you're kind of getting overwhelmed with all the things that you have going on and somebody's talking about a term case, just know that with our illustration software, Andy can simply punch in 65 male, 500,000 death benefit, whatever it is, and he's going to get, Andy, how many is it, 10, 12 different companies that are going to automatically populate?
Yeah, I can put up to 12 onto the illustration, but it actually has 40 or 50 companies on there. And what it's going to do is just pull off the top companies for us. And we can put, 300,000, 500, and 700 all on the same page.
So it's going to really show to you really easy who's the best price. If you don't like that particular company for whatever reason, you can go to the next one. And Andy, you may want to fill in some of the blanks here too on the application process. Some of my guys that I've kind of said, hey, it's a good idea to do life. It can add some additional revenue, especially in this economy. The application, I know Genworth, Andy, and there's a couple of other carriers that you can just do an online application. So you go to, I believe for some you can go to our website, advisorsres.com. Some of the others you have to go to the carrier website, but you can just do the application right online. It's the easiest thing. Hit submit at the end, and you've submitted a life insurance app, right, Andy?
That's exactly right. I will also say that I don't expect anybody out there to pull forms themselves. I will pull all of the applications. So when you give me a case to work on and you say, Andy, I want to go with Protective, okay, that's great. I will go in, pull the Protective app for whatever state the client lives in. We'll pull all of the necessary forms that you will need. There's additional forms out there as well. Let's say we have somebody who's a pilot. We may need a pilot questionnaire in order for Protective to make an offer. So I'll pull that form and I'll add it to the app package. Most of the forms are also fillable. So you can just go in and type in all the answers and then print it off, have the client sign it. But then we also have a few of our companies have the online applications as well. So you can just go in, type in the information, and hit submit. And what will happen in that one is once you hit submit, it actually sends an email to the client. The client has to open it up, review it, and sign off saying, okay, I reviewed it, everything looks good. Then it comes back to the agent saying, please acknowledge that your client has received it, and you put your agent signature on it. And then from there, it gets sent to the company. So there are some emails that are sent back and forth. I had one agent say that she was actually on the phone and hit submit. It went to the client while she was still talking to him. By the time she hung up, the app was already back to her, and she would put her stamp on it then and sent it off. So it can be a very quick process. Some people don't check their emails very often either, so for those people, you may want to do a paper app.
Last thing I think you should touch on, Andy, but in our last couple of minutes here is FIUL as maybe an alternative to an index annuity. I know that with caps at the 15 to 17% mark, the fact that you can take tax-free loans at a person's retirement. Briefly talk about, in today's environment, maybe the top 3 FIUL carriers, top 2, whatever you think is appropriate, and maybe a couple of features, sweet spots, if you will, to the top FIUL.
Sure. I will. Let me start with this: is that the life insurance market went through a major guaranteed universal life, permanent for life. Some people called it, or term for life, where it was a low-cost product that would last forever, but never had any cash value in it whatsoever. Within the low interest rate environment, companies realize that there's no money to be made in those types of products. So in the last year, I think another 8 companies have come out with indexed universal life. Transamerica, these are not the top ones by any means, but Trans, Prudential, Nationwide, there's a lot of companies that are coming out with index products because, with caps on there, it allows for them to take the extra, in all honesty, and actually make some profit. So some of the top companies that we work with, number one is probably Allianz, number two, Minnesota Life. Excuse me. With Allianz, Jason mentioned taking loans out tax-free, using the, as retirement income. With Allianz, they have what is called a participating loan rate. A participating loan rate basically means even though you've taken a loan out and the money is in your pocket, that money is still sitting in a bucket inside of your policy and is earning whatever that interest rate is that we're getting from the S&P. And so the loan rate is right now it's 5.3%. But when we have an 8% year, now we've had a little bit of arbitrage there, and we can continue to build money inside of our policy and have the account value continue to grow, even though we've taken this loan out and we've spent it on that new Ferrari. Another very good product is Minnesota Life. They have actually two products on both the survivorship and the individual side. Both of them, or I should say one of each, is designed for either death benefit guarantees but the potential for index growth, or the other policy has no guarantees but much larger index growth. Another very good company out there right now is John Hancock. And I'll say all three of these companies I've just mentioned, Allianz, Minnesota Life, and John Hancock, all have that long-term care rider. So that's kind of that MoneyGuard alternative with the Life with LTC policies, but it allows us to actually build up some cash value inside of those policies as well that we can use, for college funding, for retirement planning, just to pass on to our heirs, you name it. So there's a lot of interesting and unique uses for fixed index policies. But the nice part is, where a variable policy can lose money, these index policies, of course, are not going to. That's kind of the big alternative over, their counterpart is the variable policy. So I would say that they often look more favorable than a variable policy. The cap rates are very high. You can't illustrate a policy at typically over 8%, so it hopefully doesn't look like you're just trying to say, well, we've got a 15% cap. You cannot illustrate it at 15%. Each company has their own restrictions on how high we can illustrate a number. But as Jason mentioned, caps are very low on annuities, so it is a good alternative to possibly make a little bit extra money. There are, of course, fees, more fees in a life insurance policy than there are in the annuity. So
I have a few more questions that have come in, Andy. Quite a few comments that they have problems generating income from customers in order to move forward with long-term care.
Okay, what I would say from what I'm gathering from that question is somebody that says that they don't have the funds to pay for it. I would say you've got to really look at clients that you're sitting down with that either have some money in CDs that are sitting there, in municipal bonds, in an annuity, that say, well, I'm not going to use this annuity, I'm just going to pass it on to my kids. Have no need for it. Well, how about we take this annuity and reposition it into this MoneyGuard contract, and hopefully they'll see the benefit of, okay, now I've turned my $100,000 annuity into $150 that's going to pass on to my kids.
I think, Andy, I think that when I hear that question, I hear somebody who doesn't really get the MoneyGuard concept, because that question is saying they don't have the cash flow to pay for long-term care. The MoneyGuard concept is in lieu of having to pay out that annual $5,000 premium or $7,000 premium. This is in lieu of that. This is for people who don't want to be paying that premium all the time or can't afford cash flow-wise. So if you're asking, I can't find the cash flow, that's what this whole thing is about, is that they may not have the cash flow, but they do have assets sitting around that they're not using and probably never will use, or are planning on using that for a rainy day. Well, guess what the biggest rainy day is? It's the long-term care. So
well,
this is a way to...
Exactly right.
Yes.
In my experience, the MoneyGuard sweet spot in terms of premium is that, you know, in a large scope, 50 to 100. To break it down a little bit more, I'd say about 70,000. 50 to 70 is the sweet spot. And if you've got anything to add, Andy, I'm all ears. But that when I'm in the past doing MoneyGuard, because 50 to 70 is an absolute sweet spot, and it totally eliminates any need for future premium options. If you have a hard time finding the income, you don't need it, because you've just did a single pay, if you will. You bought some life insurance. You know, if you put in Andy's example on a 65 mil, you put 100,000 in. It's all of a sudden 132,000 for tax-free death benefit. But what was it, Andy? 356,000 in an LTC pool, if you will. And you don't have to pay any continuous premiums to keep that in force.
That's exactly right. Yeah, with MoneyGuard, you're typically going to do a single premium, and it's one time only. Like I said, they have the money back guarantee, so if they put it in there and decide, you know what, we just don't want this, we can walk away. But with MoneyGuard, there are no additional premiums. When we talk about, say, John Hancock with a long-term care rider, there's going to be an annual premium. So if you have somebody maybe that doesn't have a lump sum to put in, but they can afford $2,000 a year, then we turn around, we look at John Hancock or Minnesota Life or Allianz with an LTC rider, because now we have, you know, a small cash flow but not a big lump sum. So you'll find both scenarios. If I have somebody that doesn't have a lump sum, then I instantly transition to a life with a long-term care rider, because now we're talking monthly premiums of, you know, let's call it $200 a month for a female 65. We'll buy her a $132,000 death benefit. So it doesn't buy as big of a long-term care pool, but it still is another alternative.
Well, and the thing is, you shouldn't be shy away from that, guys, thinking that that's not very much, because the vast majority of people who do end up in a long-term care facility are not there for 7 years. There's a few that do end up that way, and those are horror stories, but the vast majority need that year or 2 years of their final care of their life is when they need it.
Yeah, I believe the statistics are about 2.5 years, 2.7 years, something like that, in a long-term care facility. But, you know, now we offer a lot more options than we used to as well. Before, if you needed long-term care, you went to a nursing home. Now we have home health care and things like that, where assisted living, exactly, that, you know, you can get cheaper care, but you can still care for yourself as well. You may just need help with a couple of things throughout the day. And so there are many different types of long-term care now, and these policies, though, are going to cover all of them. So you may have somebody that needs 6 years of assisted living, but, you know, they're going to be paying a lot less for assisted living than they are. So now our policy is going to last twice as long. So we always use that worst case, you know, example of a nursing home. You know, there's $70,000 a year, but, you know, you may just need a nurse to come in once a day, and she charges you, you know, $100, you know, for.
Well, and guys, you need to understand, because there are people then who will. The number one reason I think when people age that they end up in a hospital is because they're the caregiver for somebody who has long-term care needs, because they exhaust themselves to the point of going to the hospital, and what they'll do is not. Because they're afraid of just spending maybe $500 a week or whatever. Even though they can afford it, they're so cheap that they won't do that, and they'll try to be the around-the-clock caregiver, end up in the hospital, etc. Where if they had a policy like this that already has the benefits, where it looks like, quote unquote, they're not spending any money to get these benefits, they're going to then take advantage of these benefits. So make sure your clients understand the true benefits of this. Is not only to the person who's going into the long-term care facilities, for the caregiver as well, and to give them that opportunity to have respites and breaks and get care they otherwise would feel they, quote-unquote, couldn't afford.
That's a good point. Right.
And another question, moving an IRA to a long-term care policy, what are the tax implications? Is it taxed at your tax rate assessed on the total premium that's moved?
When I refer to annuities, at least, or CDs, things like that, it's typically got to be non-qualified. You're not going to be able to move an IRA into the long-term care policy.
In other words, it'll be fully taxable.
Exactly.
Right. That's exactly right. Fully taxable. You got it.
Okay, and can you address the simplified issue life products then that you offer?
Simplified issue life products. I mean, we do have term, we do have UL, we have whole life. We've got the hybrid products, as I would call them. So you've got MoneyGuard, life with long-term care, but we've got other simplified issues. So I mentioned term. There's a few companies out there that have up to $250,000, no medical. So it's just fill out the application, and you'll get a policy. I shouldn't say you will get a policy. You'll go through the very basic. So it's literally just what's on the application. They won't do the blood, the urine. Mutual of Omaha has the same thing on term, universal life, and whole life. It's Term Express, UL Express, and Whole Express, I think they're called. So we do have other options as far as simplified issue. You're typically not going to get over $250,000 of coverage of death benefit for any simplified issue products. If you find somebody that needs $500,000, then we have to go through the underwriting process.
And the last question, do you have prospecting tools available for disability insurance?
Definitely. Within the next, I hope, week, and I think Jason was on the call just a couple days ago, for Advisors Resource, but we are coming out with quote request forms for everybody that works with Advisors Resource. So I will have one that is designed for life insurance, one designed for long-term care, and one designed for disability. All three of those will be fillable as well. So that's not really the prospecting tool, but that's to get me the information, once you uncover the prospect. But I also have many materials from all of our many carriers for prospecting tools, client, approved pieces, agent guides, you name it. You just tell me what you need, and if we don't have it on our website, we will have it on one of our many carriers' websites.
Perfect. That's all the questions.
Well, thank you, Andy. Thank you, Jason, for being on. I'm sure, I think based on the number of questions we got, this was something that people valued. And, guys, if there's things that you want covered product-wise, please email us, and we'd be more than happy to have Jason, Andy, and any other experts they have there on the call, these calls to go over those things with you. So if you've got things you want covered, then please let us know, and we would be more than happy to get these guys on a lot more often. So thanks, Andy. Thanks, Jason. And everybody that got on the call here to listen to the top 4 techniques that a top producer makes, we'll just cover those, not next week, because next week is a long weekend. We have a Labor Day, so we will have no Monday call, but the following Monday I will tack that on to the other topic I was going to be covering. So no call next week, guys, and please, if you have not yet talked to All Pro or other mailing service about getting your event going, you know what? If you haven't done it yet, Missy, are they even be able to get it in for August, or what's the drop dead date for getting one done in August?
You're very, very tight on getting. It would be a September event. Even at this point, trying to get something pulled together for the week of September 24th is going to be extremely tight. You might have today, but I wouldn't count on anything more than today, possibly tomorrow, because of the holiday. The mailing time is extended. So you're going to miss the boat for September if you don't get on it here in the next 24 to 48 hours. But there are still 2 opportunities in October as well.
That means, guys, that you've missed 50% of your marketing availability for the next 6 months, because September, October are really the only months you can successfully market. So that means if you've not yet done anything for September, and remember, everybody I talked to, with the exception of one person, said that they were going to be doing 3 events, including one in September. And if you haven't done that yet, you've just screwed yourself out of 50% of the marketing opportunities you have for the next 6 months, which means you will not be seeing significant income coming in. Remember, guys, if you do not market in September or October, that means your next opportunity is January, and you won't see money coming in from that January event until February. So how many of you want to wait until February to see significant money coming in? If you have not yet got your, thank you for all the ones, all the people who have gotten this started and have talked to All Pro and have their events for September. But if you have not yet done this, guys, get off your keister for your own good and for your own family's good and your own spouse's good. Get off your keister and get going on this. You've already pissed away 50% of your marketing available in the next 6 months. So make sure you get going on this today or tomorrow if you have not yet done it. Thanks, everybody. If you have any needs, give us a call. If you have any questions, concerns, we're always available. Thank you, everybody, and we'll see you. Have a good Labor Day, and we'll see you in a couple weeks.
And
Thanks.
Andy, one more time with your contact information, Andy.
Certainly. I just saw the question over there in the panel, but it's Andrew.Bakken, and that's B as in boy, A, K, K, E as in Edward, N as in Nancy, at advisorsres.com. And my phone number again is 763-390-8094, and you can always find that information if you lose where you put it at advisorsres.com, our company website.
And that too will be posted out on our 5Q website underneath the resources as well.
Excellent. I look forward to talking to everybody.
Thanks so much. Appreciate your time.
Thanks, guys. Have a good Labor Day, final week of summer, and we'll talk to you soon.